Hi, this is Ali Salarian, broker at REMAX Success Realty. And today I'm going to talk about a follow up subject, which is the last cut happened by the central bank or Bank of Canada, which was 50 bips. I believe 2, 3 days before that, I was forecasting or projecting such cut due to the inflation, which fall to 1.6. And as usual, I follow Andrew Chan, and there is an article was out by him just a day or two after that cut last week. I believe was on 24th of October. So now the question by many people, including Andrew Chan himself, why a jumbo cut or a big cut? Is it because the inflation fell to 1.6, or why this is happening? This is the biggest question. Now, some are concerned there, and I'll explain why the concern is there and how the where the concern came from. The the concerns comes from the the interest the inflation, which is fall to 1.6. Back in the summer was 2%, and then by September 1.6. And we know that's good when you are around 2 to 3, in my opinion. But when you start to go close to 1 and below 1 and reach 0, then you go minus. That's what we call a deflation. And I spoke about that before. Deflation is not really good for any economy. Just imagine the value of all assets, your car, your house, everything is going to diminish, and the economy then going to be in recession. And it's really hard to get out of that, because really you want to cut the interest rate to 0. And this is in case of Japan, I was telling before. Seems to be deflation is harder to get out than inflation. This is as per the Japanese experience, if you are following up. So yeah, the so let me just go through, and as you see here, there is in that material they were talking about the interest rate versus inflation, and you see in this graph here before the pandemic and after the pandemic. There is two graph here. Before the pandemic, the we talking about the two lines here. We have the rate and the inflation. Inflation is orange, used to be 2, went all the way to a bit, and the pandemic hits by early 20 or in 1922 2022, and it was from 2, the interest rate way all the way down, almost close to 0 over there. I see in the graph where, sorry, the inflation went down. So what the during the pandemic, inflation was so down, that's why the interest rate, this the Bank of Canada intervened and start to decrease the interest rate in order to bring back the inflation to normal. And what happened, it went out of control, sort of. So that's why we see the inflation start to climb from almost 0 all the way during the heart of the pandemic, and start to climb up till 8% at the peak. And then here where 2022 late, the or somewhere in 2023, sorry, the Bank of Canada start to cut the interest rate. That was, sorry, by mid 2023, let's put it this way. And then that caused the inflation goes down, and where we reached at the rate was at 5%. Now we know is 3, and where we see now the inflation start to go down, being from 8% and reach, now we can say now that there is a continuation to this, which is now below 2%. So that's the inflation versus the interest rate. Now there is another factor as well called the unemployment rate. So now seems the Bank of Canada would focus on the second factor in the whole thing. First was the inflation, which is back under control, and it's not just bad under control. You have to really control it, and do not let that inflation goes as a deflation, as we said, goes to 1 and below 1 and 0 and minus. The second concern by the Bank of Canada is the unemployment. So unemployment reached somewhere between, it was 5% or below. I remember even before pandemic, then it climbed all the way to 6.5 on average national-wise. Some places in the GTA they are up to 8%, or some places. Let's talk about our market here. And then now this is the second step where Bank of Canada is going to focus on, because if the unemployment is high, there is no job for the people. Guess what? It's going to be hard for people as on demand side, as a buyers, to jump in and get into real estate. And this is what we are talking about, is real estate, right? So what the Bank of Canada next step is with making money cheaper and cheaper available is for the big company and corporation and even small medium business to borrow more money and invest into creating job, invest into business in order to bring people back to the work. Not just that, the government itself would invest and should invest, and I think already started to invest into mega projects, infrastructure, and so on. Spend money, bring people back to the job, and this is how you bring so the unemployment back to the, let's say, 4 or 5% level. And of course, unemployment, the lower goes, the better is. It doesn't go minus, it goes zero, which is everyone employed, which never happened in any economy anyway. But a level of 4, 5, 4 is excellent. 5 is not bad, but above that, in my opinion, is a concern a bit. So this is what Bank of Canada is focusing on. Now, the biggest question is, it the cut happened just last week? Is it big and fast? Is it too big? Is it surprise? In my opinion, yes, it's big and fast, and they might come with bigger and faster. So there is another two meeting. One is in November and one is by December. And there is a lot of rumors here in the bankers community and economists community that is going to be another 50 bips. Now, my projection is I would wait to see how's the inflation and the unemployment rate is going to be by end of October. Let's wait for the results. So first or second week of November, we're gonna know that. So that's why I believe November is gonna be kind of nothing is gonna happen, sort of, because it might be too early for them. So if the inflation continue to go down and the unemployment no change, that where you see they might come with 50 bips or 50% half percent cut. If it is not, so meaning 1.6 or maybe goes up a bit, I think is going to be 25 bips. That's my experience. Now, remember one thing: the goal of Bank of Canada is to achieve another 100 bips by end of 2025. So the question is whether it's going to be fast and big, or it's going to be slow and small cut. That's a debate right now. So remember one thing: economy is not like a switch on and off. Economy to do with the consumer's behavior. So when we talk about consumers' behavior, we're talking about is a reaction of a human people, right? Human. So if you do increase the interest rate or decrease the interest rate, it's not gonna be overnight people reacting. In economy, always we have a term of quarter. Why quarter? Quarter is good enough, 3 months to see any change. Most of the change should happen within a quarter or two. So quarter is 3 months, then 2 quarters, 6 months. So whatever happened back last week in terms of 50 bips cut, in my opinion, you won't see the impact right away. Well, we see in real estate, yes, that's what I'm going to talk next about. But the good and big impact is going to be the next quarter, which is beginning of next year. And in my opinion, the biggest impact we're going to see on the second quarter, when eventually big employers are going to hire people back, where we see the employment rate goes down with cheap and money available for them, and government is spending with in mega projects. So that's going to be second quarter before the summer. So what that impact has, what that kind of like, what is that going to be an impact on the real estate? I projected that before and already happened, which is below and around 1 million non-condo already in growth. Most of the realtors, most of the people they know in the market, there are multiple offer and all of this happening. Again, normal way, not a crazy way. The 1 million to 1.5, in my opinion, next seasons, they're going to be in growth, right? in a consider like noticeable growth. Let's put it this way, which is the next season, which is our spring season in March, and the condo and above 1.5 and custom made and bigger houses, they're going to have the impact by end of 2025. It could be the third quarter, not the third or fourth quarter, avoiding summer, because summer, nothing's going to happen in the summer, and so on. Now, I heard for some realtor yesterday, they said some big brokerages, they projected October to October is going to be 20% growth. In my opinion, I don't believe so. Let's look at the data is going to come out of trip by the first week of November. Yes, it's going to be growth, but not that 20% we think. It's going to be maybe 5 to 7 growth or something like that, below 10 for sure, but not 20% in my opinion. Now, one thing I want to clarify about condo, I know most of us or many of our clients are, or people, consumers out there, they are condo buyers or condo owners. When I say condo, the mega market in condo is going to be the last one to grow, which is Toronto pocket. But the small pockets like in Oakville, Burlington, here and there, maybe Hamilton, maybe Brampton, maybe a smaller pocket, Milton, maybe those pockets we have less and less buildings are out there, less cranes, less projects. Those are going to grow faster or before end of 2025. But end of 2025, everything will move together, grow, but with different level. What we learned today from today's discussion is be ready, whether you are a seller or buyer. If you're a seller, you take your decision based on the data here we are sharing with you when you go and sell. And if you are a buyer, take a decision. Again, especially first time home buyer, don't be on the fence. You don't need to wait for more and more. I know people having this kind of psychology. I want the rate to go more down and down. Then go for variable. Variable is where you are on a safe side. If the rate goes down, unlike the fix, because fix, you're going to fix it for the period of time, whether it's 3 years or 5 years, then you say, oh, rate is going down and I cannot change my term without penalty. Variable, you go down with the rate down. So lesson to learn from the past. Variable rate is good with the market, the interest rate on the cut, and fix is good when the interest rate on a rise. That's a lesson we learned from last time, and I hope myself and everyone else know next time when we come through a similar cycle what to do. Again, thanks for your listening, and remember, if you need any help, reachable, my information is going to be below this video. I'm even going to post the Enderchan video about what we talked today. Then we're looking forward. We're happy to help you. Again, in the market, in real estate, nothing is general. If you have something, if you have a product, if you have a property, whether you sell or buy, we can go in details and very detailed and specific about your property, because we cannot generalize. We are happy to help at REMAX Success Realty, and I wish you successful real estate. Bye for now.